Welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Don Pollard. Don is a chartered life underwriter, which is initialed CLU, and he's also a chartered financial consultant, which is initialed CHFC, and an insurance broker at Advanced Professionals, which is a regional insurance brokerage company headquartered in Northern California, and it serves about 350 clients. The company offers employee benefits and executive life and disability insurance planning. Don has worked in the insurance industry since 1973, and he's been at Advanced Professionals for 13 years, and he's managed insurance agencies and trained agents. Don is currently the president of the Silicon Valley chapter of the National Association of Insurance and Financial Advisors. Okay, so I've been getting questions from people related to health insurance, so we're doing a few programs on that. And Don and I did a previous series, actually, of 3 consecutive interviews about healthcare reform. You can find those at the website, financialinsiderweekly.com, under past episodes. And I also interviewed another friend, Naomi Comfort, about that. And so anyway, today, Don and I are going to be discussing group medical insurance for small business. Don, welcome. Thank you for being my guest today.
Thanks, Mike. Appreciate being here.
So before we get started, just a little caution. Some rules for medical insurance may vary from state to state. So you need to be sure to work with a consultant who is familiar with your state laws. Okay, Don, let's get started. Why should a small business consider offering group medical insurance to their employees?
I think, Mike, that's a good question. I think that basically the reason that a person would offer something like this to their employee is to help that employee to try to plan for the things that you can't budget for. So medical expenses could end up being huge in any given year and not readily or easily budgeted for by an individual. So certainly an employer can do a valuable service to their employee by packaging and offering a group level benefit plan for them. Also, it certainly makes working at your company a better opportunity for most people than if you have to be thrown into the individual insurance market to try to buy medical insurance on your own, which, as we talked about previously, is getting easier, but still no easy task. So it certainly a valuable benefit to provide to your employee. You're certainly doing them a great service by offering that.
Right, and if you have 2 employers that you're thinking of getting a job at, and one of them, well, maybe it's got a slightly lower salary, but you get medical insurance, and the other one, you don't get that medical insurance. The medical insurance being provided for makes the job seem a lot more appealing from a competitive standpoint, I would think.
Yeah, absolutely, and actually that's how medical insurance as an employee benefit got started, was when there was in the past there was wage and price freezes, and businesses had no other way to try to differentiate themselves, and so they began to offer supplemental type benefits that would then relieve the employee from the responsibility to buy that on their own account. So certainly it's a favorable thing, and most employers that when they're surveyed, they understand that this is the main reason that we're doing this is because it does differentiate us from others and allows us to retain the good people that we want.
Okay. Why don't we talk for a few minutes, because again, we've had some healthcare reform legislation has gone through, some of it which is coming on board. So let's talk a little bit about the tax credits that are becoming available to small employers under this healthcare reform.
Okay, and I think the tax credit for the small employer is one of the major factors of this law, and as you probably know, Mike, 85% of the businesses in our country have less than 10 employees. So clearly, could be a huge, or would be a huge impact on these people. And there are some parameters to that people could look up on the internet, basically on the number of employees. But in general terms, if an employer has less than 25 full-time equivalent employees, and there's a calculation that's done to determine whether you fit into that category, you could be eligible for up to a 35% credit on the premiums you pay, so long as you pay 50% of the premium for the individual employee for their insurance coverage as you go. Now, certainly there are some additional credits and takeaways as the number of employees grows from 10 to 25. So it's a graduated type of a calculation.
So when you have more employees, the percentage goes down.
The actual credit becomes smaller, and there's many calculation tools available online. And if folks don't have that availability, if they want to drop you a note, I can send them a hard copy of how that works.
Mm-hmm. And now there's also, though, a big piece of this related to the compensation for employees.
Right.
And so when you have your average compensation for employees gets over $25,000, then the credit also is decreased.
A similar kind of reduction. So in basic terms, the average compensation cannot be more than $50,000, and the owners of the business are not included in that calculation. So it's only the employees that you're talking about, and so clearly designed for lower income, smaller businesses to get a helping hand with the premiums that they would pay for this insurance.
So if you had, I'm just throwing thoughts out, but one is if like if you had a smaller restaurant, maybe a Subway or something like
Sure.
that. You've got a convenience store maybe. So someplace where you do hire people, but they tend to be at a lower wage level. But for example, a CPA firm. CPA firm. I would pay more than $50,000 to my full-time employees, and so it sort of knocks me out.
Well, yeah, and I think you're absolutely right there. The key to any of this that has these various and multiple requirements is that you get working with somebody that knows how to do the calculation or can help you through that calculation, so that you can actually determine what it does mean for you. But again, those and a competent broker, a competent accountant, a competent anybody could help you with that scenario.
Okay. Well, a competent broker or accountant. We'll leave it at that instead of anybody. Now, what happens after 2013 related to this? Do you recall?
Well, in 2014, we have access to the exchanges. So a huge portion of the law relative to the marketplace for insurance for small employers. So at that point in time, a small employer would open up an array of options to themselves or their employees. Now, in 2014, there is also what's required under the law is the employer mandate. However, it does not apply to companies with less than 50 employees, and so that's going to be a limited type of a situation. But as you know, the exchange theory will have a set of benefits that are easily comparable between themselves, and then various providers, insurance companies and HMOs, will come and offer a price for their particular for that particular plan of benefits. So it should give small employers an opportunity to basically increase the array of what they're looking at.
So the website, I mean, excuse me, I say website, the exchange is going to be probably like a website where you're going to be able to have information about various plans available there and made in a way that you can compare them.
Yeah, I think it's absolutely going to be a website, and you know, the comparison of the plans, we'll see how easy that becomes. Again, I think the ability for people, for individual participants or employees of an employer, if they have an option to do more than one thing, you know, that's probably going to be more favorable than if they just had one opportunity. And the exchanges should allow that. Again, though, then there comes into play the necessity for basically understanding and the terminology, or having someone helping you that does understand that terminology so that you can make a good decision. You know, the interesting part about the whole thing is that you know, how many times does a person shop for their medical coverage? You know, maybe once a year at best. Mm-hmm. And so the constant nuance and change and the change in the person's situation, you know, makes that decision a lot harder to kind of deal with mm-hmm. during those periods of time.
Okay. So maybe, again, we can sort of recap or restate the employer mandate a little bit.
Well, the employer mandate is another provision of the law that requires employers of 50 or more employees to provide insurance coverage, affordable insurance coverage for their employees. If they don't provide that coverage, then they're going to be subject to having to pay a penalty mm-hmm. For that. So again, for employers with greater than 50 employees, there's a situation where there's going to be some form of calculation, if you will, mm-hmm. to determine relative to the costs, how much is it going to cost me if I provide insurance, and how much is it going to cost me if I don't provide insurance. So there will be that piece that needs to be calculated in there. And then also the other opportunity is how much of a penalty will I need to pay if I in fact don't, and if some of my employees end up becoming subsidized. So that, again, as with any of these reform provisions, there are steps to go through to actually calculate in any one given situation what your penalty would be, if any, mm-hmm. and may not. And so again, a competent advisor
okay.
to help you.